Mess with fire, now it's closing in. Nothing to bear and nothing to win. Nothing to win. Could you believe? Could you believe? Could you believe? Could you believe? Step in the fire, take my hand. I'll take you higher than you've ever been. You've ever been.
All right, thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same without wasting a single second of your time. Bada bing, bada boom, we go. So we got that rejection off the 0.65 of the diagonal pitch fan and the rejection of the 618 all the way down now below the 0.5 equilibrium of the mean reversion path to the upside on this pitch fan. We've had price action in since January time, and so we are currently at an equilibrium price of this bullish trend based idea. Could we continue lower? We most certainly could. Let's go ahead and take a look at the liquidity without wasting a single second more by going into high block. What is high block? Well, people lock their liquidity into the charts to get burnt to a crisp by the market maker, and we get to see where those crispy characters without stop losses got hit or wait to get hit again. So we saw this drop to 29.2 as we projected over the last 2 or 3 days, and we've been wanting to see for longer than that, but accurately predicted the stop hunt rise to drop to the downside. So they go up to go down and down to go up. And so now we've gone down, and in the meantime we have pinged in some. So, ooh, come on, guy. So as it stands, we have taken out this entire range of liquidity on the higher time frame, as well as the internal and the external liquidity pools, and at the same time have pinged in $517 million in short liquidity, which they immediately V-shaped into on the 100x side of things and took out all the 100xers, and now they're retracing into the 100x longs with the consideration of a double bottom to come back to the 50x pool.
Fatality.
That's why you should always consider paying yourself, especially if you're on that high leverage, because they see you and they come back to you with the fury and without hesitation. Same with the longs here on the 100x. Just for transparency, I did enter a long off of a signal on my indicators, as well as just waiting for the levels that I came back to. So we're gonna see if we can scalp this up to that level and just have a win no matter if it knocks us out or not, or we could take a loss. Who knows what will happen. The future is not set. It is up to us to figure it out. So as we see on the 1 minute time frame, we are imbalanced by 6 billion in short liquidity that they could retrace back into at least 50% of the vector candle, which takes us up to that 29522 region. And after we expand our vision to the higher time frame, we will see that other external pools have also been knocked out as well. So let's go to that 7-day time frame and see. Shout out to everyone here. What's up, Zena? Shout out to everyone here. So as we go to the 7-day time frame, we were saying was slightly ambiguous, despite us seeing on the higher time frames the imbalance to the downside. So it looks like they knocked out on the 7-day time frame this near 5 billion plus in longs, and then they could of course come lower. There is 4 billion at 28.7, 4 billion at 28.750, 4 billion at 28.8, and 3.5 billion at 28.850. So if they do go up, is that just to continue another leg down, another B wave up before a C leg down? We will see about that, part of the pun. So let's go to the 1 month time frame and see what is there. So they previously came to the 1 month time frame, took out that 22 billion, 19 billion, 15 billion, 12 billion, and 8 billion without hesitation. Did this spawn enough divergence to start to see a little bit of a retrace up into these pools? We do have the FOMC meeting inbound. Is there a bearish sentiment inbound, bullish for the dollar and bearish for Bitcoin to take us down into these regions? Time will tell. Are they pricing it in already to see a higher move up after that point when everyone gets bearish? Because remember, when it seems obvious, that's when they do the opposite. Remember the Silicon Valley Bank idea at 19K, everyone was bearish, and what did they do? They sent it to the upside. So it's counterintuitive. News plays generally already get caked in advance. So are we getting this caked in nature as it's occurring before the news is released, and then the catalyst, they send it as everyone gets bearish and shorts and provides the liquidity to the upside, as they did with the Silicon Valley Bank failure? Just throwing these ideas out there, just take them in stride. So it looks like there was like 50 billion up here, 20, 40, 50, 60 billion that they took out on the monthly time frame. So that imbalance has been reconciled thus far. Do we continue lower? There is yellow down below, but seeing a retrace at least into some of the liquidity in the vector candles. We will see if that occurs. Let's go to the 3 month and expand our vision to the external liquidity pool of the 3 month. On the 3 month time frame, we took out 70 billion on the 3 month time frame, and it tapers to about 20 billion down at 28.8. Do they muster the strength to come lower, or do they start to retrace back up into these pools? We could be seeing a sideways consolidation and try to ping both sides leading up to Wednesday's FOMC. There is a FOMC meeting. Please be aware of that on Wednesday. as we expect. Oh, before we jump the gun, there is also that sub 25k pool, which is most likely market makers because they left it unscathed back here to build. So are they going to come back down and break these and Bart Simpson down to the bottom? We'll see about that. Let's go to the 6 month. Looks like we're currently going and retesting the 29k region. On the 6 month, we took out the $56 billion at 29.1 and have yet to take out the 28.8 33 billion on the 6 month time frame. The imbalance is to the downside on the 6 month time frame, with 142 billion down at 24.6, 180 billion at 24.3, and 100 billion at 24 even. So if they do make their way down to this region, it would be fast as it was up. As it goes down to try to take out these pools down below, the 6 month time frame insinuates a Bart Simpson down to these regions if that is the case. Do we go to the 12? If we go to the 2 year time frame, this is where it starts to shift a little bit to the upside, where you start to see these pools on larger time frames of the 175 billion up at 32.4, 181 billion at 32.8, and 197 billion up at 33.2. So I would expect these to come up to here before they retrace down into these pools, but that's just me. I could be completely wrong, and they could come down into this $241 billion at 24.4, and 117 at 24 even, and 141 at 23.6. Currently, we've wicked off the 29.2, 96 billion, and are starting to see potentially going up from there, or are we going to go to the 28.8 region and see that 66 billion reclaimed? Let's go back to the monthly and start to see where these internal pools justify themselves, and then we will go into the 1 minute once again, see what is getting pinged in as we speak, and then go into the charts. So one thing I'd like to see right now is they just pinged in 41 million in short liquidity on this drop down here, and they're wicking, giving them the teasing the idea of profits, but they're currently almost at break even, so they could come back as opposed to 16, 18, 23 million in longs. So there's, after taking out all of these 100x longs, they could be coming back to the shorts at some point, at least for a vector 50% retrace up to the 29.522 region. That's what we're expecting, at least for a little long scalp where we can set our stops into profit and set and forget about it if it kicks us out or not. We'll see if that plays out, or are we coming lower into these 28.8? Is the move not finished? Let's go into our indicators and take a look at the Binance chart and the fibs that we had set. So I adjusted my bearish trend-based fib level from this morning to be more accurate to this first impulse and first retrace, and adjusted it to be more accurate where it started to react from. And so we'll go into that and explain what we're looking at as we throw on our indicators here. So what are we going to throw on? Heads up display on. This is momentummaster.info, link in the description. And you can see it looks like we're getting a cross down event, so something to be wary of on our indicators here. If you toggle everything at the features section, you can see everything here, or you can look at each component as we go over them. So as it stands right now on the 12-hour time frame, we are getting a cross down event, which is starting to ensue in the next 9 hours. If this candle closes with this intact, we are seeing a potential for downside to occur, and in a similar fashion where we got this suppression for the last, since basically Saturday, July 15th, and we saw that suppression and a fake out of this cross up event. So this negation of the cross up is happening with this downside move here. And are we going to see this continue or not? As the bearish trend-based fib level is demonstrating, when we got that rejection at the 236 at the 30,107 level, then we are starting to come down to that one level of the take profit region at 29,009, and we wicked off that almost exactly on this chart, which is why I adjusted my thing accordingly with the wick impulse retrace idea of the first impulse and the first retrace, not extending it up to here, not extending it down to here, just keeping it simple. And yeah, so this is, we've hit that one level of the trend-based fib on the 12-hour time frame. If we start to adjust, we're currently getting that bearish retest rejection idea off of the trend cloud, and the baseline suppression on the daily time frame since July 2nd has been proving to show a distribution inbound. Is this going to continue, or are we going to see a surge up in the coming days? Let's go ahead and look at our indicators. Daily time frame is getting oversold on the Williams, and you're getting this potential bottom forming on the Williams, which we have not seen since back here on June 14th and beyond, when we saw a little bit of a bounce each time. So are we going to see this bounce occur with the Williams oversold, or are we going to get suppressed as we come down and put in some new lower lows? This daily candle close will set the tone for the week, so we need to take a look at how that will occur. The 22-hour time frame also oversold on the Williams. The ambiguousness of the continuation idea of the stochastic RSI could keep going here. The money flow in the RSI coming down to a below 50 region, potentially gearing up for something. If we look up to the 12-hour, once again, the 12-hour cross-down event has you in the next 9 hours. How does this close? Does it close up in the midway region, giving the insinuation of holding this range, or does it get wick down some more into the 1382 at 29,8450? As the 12-hour holds the 50 level with the KD lines crossing down, but the Williams and the money flow came to the RSI. Now everything coming to a head here with the money flow, RSI, and the KD lines at the same value, strangely enough. One thing we haven't done in a long time, which we're going to do for Momentum Master B, is throw on our higher time frame and lower time frame. I forgot that we could even interact with that. It's been such a long time since I've thrown it on, so let's do that now. We'll actually do that after we get to the 4-hour time frame. But first, the 6-hour time frame is going to show that we have reset the 6-hour, but the Williams could still keep coming down. You got the cross down on the leading MACD, which could continue further down into the domain of the Williams. Getting less volume here as we drop on this last candle. Looks like it could be a test of this wick to see if we got a double bottom or not. Not panicking just yet until we break that 29K region with the fury. All right, so now we can look at our stochastic with multiple time frames and see the interactions between them. So as it stands with the 4-hour, we were pointing out the cross down event to the Momentum Lab trading group. We were seeing that before this drop, we were seeing that there was a potential cross down event. We said, hey, cross down event inbound, we could be coming to this region, and sure enough, boom, we hit that region with the hammer. So this is what happens with these cross down events. We had this leading for you before the drop, so these cross down events are something that are to be minded. Same with the cross ups coming up at you. So until we can get these baselines beneath the price on the 4-hour time frame, this is just a scalp idea for a long up into the short liquidity up above with the arrow. As we look, let's take a look at the momentum here. So as it stands here with the hourly time frame, the hourly stochastic getting suppressed by the 4-hour. The fuchsia and aqua color is the higher time frame, which is the 4-hour. The 4-hour suppressing the hourly here, and then you have the 15-minute also potentially coming down to suppress the hourly and give this superseding the takeoff here on the hourly, and the hourly comes down. This is where you can see some interesting reactions with the multiple time frame idea. So you can turn on higher time frame and lower time frame stochastic, and you can say, well, why is the hourly not playing out here? Well, if you turn on the higher time frame, you can see that the 4 hour is basically resetting here, and then that 4 hour is causing this like a water flowing out onto a hose. It's suppressing the flow of the water from going up, and so this is what you could be seeing in terms of suppression. Of course, yes, you could turn this off and just go between the time frames, but this helps to illustrate the interaction between them. So if you go to the 4 hour time frame, and this downwards momentum of the 4 hour, which could continue further down in the next 1 hour and 30 minutes, was what is possibly suppressing the hourly takeoff here. So in the next hour and 30 minutes, when this 4 hour candle closes, that could reset this idea and create this hourly play. You are getting the double bottom, the fertile crescent as we call it, on the hourly time frame. We did have one back here on July 13th with this double bottom on the Williams with the rising sun, double bottom with the Williams on the rising sun. Where does that take you? Well, in a realm such as this. So on July 13th we had that similar Williams play, and then it took us out of that region for 5%. So this is where you see that confluence on confluence. If you start to see the Williams in a domain with the MACD saying what's up to it, are you going to wake up and give us a rising sun or not? And then you get these stochastic in the key levels as well. That's when you start to see some sort of interesting point. We're not quite seeing the baseline scoop up the price on the hourly time frame just yet. So this is what we're talking about with that suppression of the price on the with the potential of the 4 hour higher time frame with the lower time frame reset here. So you have the 15-minute in orange and yellow, lower time frame also possibly coming down with the 4 hour to suppress that hourly here. So in an hour and 30 minutes with this 4 hour candle close, it could reset some of the momentum, and you could see some time frames start to shift out. By the looks of it, it looks like it's still trying to do that within this 4 hour candle close. If we turn off the higher time frame and lower time frame now and start to head into the 15-minute, we can see that 15-minute is also resetting as we saw here. So that 15-minute with the 4 hour momentum coming down to a way here, we are getting the baseline still potentially holding here as we reclaim this wick, and the liquidity that's inside this, which we've already ascertained to be these 100xers. So if they were going to send it up, they want to take out all these 100xers first and try to ping in as many more shorts as they can before sending them to the upside. So it's a win-win scenario where they take out the majority of these longs and at the same time induce the shorts, and then that's when they create that double bottom to get out of here. Once again, we're looking up at this region though, and we're seeing this little bit of happiness up at 29,522 at $517 million. That's quite a large amount of money to be paying 50x2. So at least coming up to that recover that pool. Granted, their partner in crime at 25x is up here at 30,100. I'm frugal in my expectations, so it could come up to there at some point, but I will be most likely trimming by that time and looking for another setup. Alright, so let's look at the 15. We're getting some purple vector candles here. The purple vector insinuates a stop hunt. We had two red vectors attempting to come down here, getting bought back, and we're getting a purple vector suggesting a stop hunt, and we're getting less volume on this last hit down, which is basically slowly but surely recovering that vector on the 15-minute time frame. So the 15-minute is going to reset alongside the hourly in the next 30 minutes. Let's go take a look at the dollar and juxtapose that with what's happening in the world markets, as somebody was asking what was going on with the dollar. So we were looking at the dollar as this potential double bottom. You had the rocket ships letting you know that that was ensuing as we were coming out of this on the indicator. And this was also a fib level on a bearish trend-based fib extension from this impulse and this retrace up to here, and we hit the 1618 level and started to retrace out of here on the dollar. So is this FOMC, they're expecting to raise rates, is setting up for the dollar to recover here, and you have a shoulder, head, and potential shoulder to recover, and that would put Bitcoin in a bearish state. Gold was previously going up here and retraced into the 618 and started to come back, and now you're seeing some sort of downturn in the last 2 days for gold. Are we coming back to the cloud to kiss the cloud and continue? If we look at the NQ has also been, people have been trimming and taking profits, and we're getting to a region here of that potential 618 of the range to bounce out of the 15.44475 region. I'd expect a bounce off of that if we do come to that level, and this is due to a lot of companies, Tesla and Google and Nvidia and Netflix, everyone's taking profits on, so this causes the Nasdaq to drop. And is this also setting up for that meeting and everyone's trimming before that time? The ES is surprisingly holding strong, stronger than Nasdaq at the moment, and it's creating this double bottom continuation idea here. You do have some higher time frame areas to reclaim back in this region. If we go into here, we're currently at the top of the range here, but we could come back into some of these regions here. There is a vector to recover over at 4,700 and another one over here at 4,766. And if you just talk about the range where we're currently at, coming to the top of that would put you over here at 4632. So if we continue back higher, we could come into these regions for the S&P. We still have a gap down here which has yet to be reclaimed though, so at some stage we would like to come back into this region. We have yet to come back into these vectors or the 618 of this impulse. So if this is just creating a double top scenario, it could be a fake out to come down here as well. Let's look at the 12-hour time frame. The 12-hour is reset in a manner here, and the cross down event has been holding strong on the ES, so we could be seeing this surge up to it for an extended M to reclaim some levels before the retrace comes in. Looking at the dollar once again, attempting to come back into this vector range at 101.646 and possibly above to a range at 102.563. If we look at the 12-hour, extremely overbought. You had that double bottom, fertile crescent, rising sun idea coming out of here with the double bottom, so what you like to see. And it looks like we are coming down to the 29K region for Bitcoin. Let's take a look. Shout out to everyone here. Yo, yo, yo. Meluo, what's going on? So we're getting the cross down event on the 5 minute. So if you just take these for what they're worth, these are the scalpers dream. Your first sign of reversal. The baseline is one of the few leading moving average formulas you'll find on the market. They're very fun to juxtapose on multiple time frames. When you get those in alignment on multiple time frames, they're very smooth butter entries. All right, so the London close, this is basically doing the run on liquidity here with this London close, changing of the guard, the baton pass to New York, from London to New York, between this time from 11 to 12. This is why a lot of streamers stream at this time, because they want to take the credit for the momentum shift and say they called it, when it's just the way the market operates in actuality. So we're coming back to this, and this is why I don't normally stream. If I'm actually trading this time, it's to trade it live is exposing, let's say. It's a kind of exposed feeling to be trading during this live. But yeah, we're reclaiming the wick and possibly shifting out of this region. We're getting a green vector, these notable volume candles. And if you have the Momentum Master, you're getting these alerts to your phone right now, whether you're watching the live or not. It's showing you 6 time frames oversold. We talked about on the Asian session today, if you wait for that 6th, then that's a key thing. It did not close with that intact, but I did get a message to my phone which did say that 6th level either way. So we're going to screenshot that just for record keeping purposes, because this could be a bounce, a nice juicy bounce, because we have bullish divergence on the money flow here, triggering the stop loss hunt down. Normally you see the bullish divergence, it triggers a stop hunt in the algo, and then now you're starting to get that reclamation of the wick idea. We came down to 29.30, almost complete recovery of the vector here. If we go to a 1 minute time frame, we completely recovered the candles here, and the wick almost completely as well. And this is where you get your bottom sniffed out with indicators in these cross-up events cascading, and you watch these baselines come beneath the price here, and you look for these rising sun ideas, which are fractal in nature, which occur on all these time frames. So you try to get them lined up on multiple time frames, and that's why these little symbols from the stochastic array will do that for you. And if you get those sixes are really nice, generally speaking, for juicy positional trades. 5 and 6 is a good number, which is why I'm personally seeing where it takes me. So we got a 5 level here after a nice liquidity grab. So you got liquidity grab, check. You got 5 time frames oversold, check. You got some bullish divergence, check. Stop loss hunt, check. Williams and everything in oversold status on multiple time frames, check. So the only thing we can do is see where it takes us. Right around the silver bullet time, check. Boom, can't ask for more than that. You're getting these blue stop, so far the blue stopping volume candle, and this turn green into a green vector up to this region. We are here to see it. While everyone's getting bearish, let's see what the liquidity looks like. Getting more shorts pinged in here, like to see it. $33 million, 15 million, 33 million, all pinged in at the lows. Like to see it as they stop out the 100x longs. Good signal for coming up for here. You know, a lot of people use XO charts, but just like anything, you can glean information and where traders are trapped based off their entry from here as well. You don't need to follow the herd. You can, you know, pave the way with your own thing, and I think 𝗥𝗲𝗿𝗁 does a good job of illustrating it with nice little bubbles and stuff here, and you can see it without all the numbers and the math making it look overly complicated. But XO charts is another way that people like to do it these days in terms of talking about open interest and CBD and you know, where traders get trapped. So this is where you see traders get trapped. So these shorts that shorted the absolute bottom, thinking that we're going to like 28k and stuff, breaking the 29 region, are the ones that they could come back to and use their liquidity to surge up and pave the way to come up to that $517 million character, while at the same time stopping out all of these longs. So all of these longs that were V-shaped recovery and hoping for the trade, because they're 100xing, they got liquidated here rather than frugally sit with a cup of coffee and a reasonable margin with reasonable leverage, and then they got liquidated. Could they come lower? Yes, but there's 18 million, 23 million, 18 million, 30, there's a 34 million, and you juxtapose which one has more in that immediate range. And as it shows right now, there's more shorters right here and then to the longers immediately in this range. So they could be shifting out as we speak. And you're getting that alert to your phone. This vector, which is blue, is now turning green, and you're starting to get the baselines, which are holding on this cross-up event, still holding. And even just getting a simple percent gain up to this region would be very nice to see. The leading MACD was crossed up back here alongside the baseline, so we're still seeing this MACD cross to the upside. This normalized MACD is set between a framework of 100 to -100, so it's extremely sensitive to changes and becomes leading in nature. So it gives you that upside idea before it even knows it wants to be an upside idea. And you can set those alerts to your phone. By the way, if you have Momentum Master, you can go to this and go to add alerts, and you do pump or dump on the time frame where you're choosing. And when these lines cross, you can see that occur. And you can also fill these in if you like, and you can set to different moving averages to see if you can glean anything. It's completely customizable, so you can see these cross-ups in more detail. I think I'll leave that on for the time being. It's been a while since I've turned on the color to that. And so the MACD has you at hello as well. So you got the MACD interactions, and the MACD comes down into the Williams domain and says hello to the Williams on occasion. So it looks like we're getting this double bottom sniffed out and wick recovery, and we're starting to see this shorts getting trapped. And as everyone's calling for bearish sentiment on their TA, seeing bear flags and drawing channels and whatnot, we're seeing the liquidity and the momentum express ideas of upside, at least to the vector recovery at 29.521. So this is one of those patient trades where I don't really have a second guess about it. It's just all lining up, because that's what we wait to do, to take those things that line up, where the baseline comes beneath the price like this after a liquidity grab. It's scooping it like ice cream, and we're seeing the double bottom on the Williams, like this MACD coming up saying hello, like everything's in a low position getting ready to surge. To me, it's you know, I'm always open to the idea of being wrong, but this is one of those higher probability ideas for me personally. The only thing I don't like right now is the 4-hour. This 4-hour cross down event could be in a better position. So this is why I'm looking at it as a scalp and setting the stop into profit, ideally speaking, as I go, because this 4-hour is ambiguously against me. We'll see how this closes in an hour and 12 minutes. But ideally, you'd want to see that 4-hour in your favor alongside all of those hourly plays as well. Let's go back to a position where that was lined up. So, for example, here. So, here, for example, you had the 4-hour lined up. Let's just go back and replay this. So you had a cross down event, liquidity grab down to 24K, and you started to break up above this. Now if you break up above and cross this cross down event, you negate it and cross it up, and then you start to see resistance on this idea. Granted, your hourly time frames, notice anything similar? Check it out. You have this kind of the cross up event on the hourly playing out. You had this like recovery of the wick, you surged up, you reclaimed the cloud, you flipped it with this little the thinning and reversal idea, and it came down to kiss it. You had that rising sun play out on the hourly, so it's all how the rising sun takes you out with aggression. Now, if it takes you out with aggression and comes up and recovers that 500 million and holds, and then resets that and kisses the cloud, see how it kissed the cloud here? All of these ideas were back tested by yours truly for over a year and a half. So this kind of back tested idea and holding of this super trend was why we saw this continue and cascade to the 4 hour. And then so the 4 hour basically crossed up here and held the baselines, and then this coincided with that kiss, and boom, we were taking it to a higher level. So as you go, you set the stop loss into profit at these key levels like the super trend on the hourly, and you try to see where it takes you from there. Could totally Bart Simpson keep going down, so you trim as you go, take 25, 50%, 75, whatever you're comfortable with, or you can reposition if you're awake at the time. And that is how a minor thing can turn into something bigger like this, and then it cascades even higher, and you can get those higher time frame plays to ensue. And then this was also giving a rocket ship, I believe, on that Thursday as well. We don't have the rockets this time around, so I'm not really expecting the same fervor, but we have looked at the idea of the narrative of sweeping the lows and then possibly coming up into this region to sweep these before a solid retrace into the 24K region. So we're going to test that idea, that narrative out, and see if it plays out. So we're getting this bounce off of the one region as we speak. The 6 hour time frame also not in my ideal sweet spot. Here there was a 6 hour, it took some aggressive candle move for it to negate that, so we would have to see some aggressive candles to negate this. And we've seen a lot of like wick whacking of the, which is why we weren't sold on this. We wanted to see the Williams come down further on these higher time frames, and we've currently seen that now on the 12 and the 22. So basically the Williams coming down here into a region on the 12 hour is something we like to see, as well as the 22 and the daily. So this daily, now the daily recently has not been giving you the double bottoms. If it gets into this region, we could be seeing some meandering around in here before the surge up, due to potential flirtations of a cross down event on the 3-day, which has now seen this cross down symbol occur. Now this cross down does not get locked in for another 2 days, so it could be inbound for a 3-day retrace, and this last 3-day one played out for a large percent and continued for a time, for basically 60 days. So that is something to note as well. If you're looking to long, beware of the 3-day cross down, which did occur from April last time with 𝗥𝗲𝗹𝘁𝗲𝗍. The daily suppression, until we can get daily candles back above the 29.5 and start to reclaim and close above these baselines, this suppression is still in effect as well. We have failed out of the cloud, which was a bearish retest continuation to this region, so please be wary of that. So we don't have everything lined up in exactly the ideal situation that we would like. The 12-hour cross down event is ambiguously working against us at this time, with the Williams in a good position though. So getting some mixed signals in that regard, alongside the 6 hour. So you could even come into this region completely. Let's go look at the liquidity to try to negate the theory of a bounce right here. So you have 28.8 billion on the monthly time frame. Let's just zoom out real quick. So on the monthly time frame, you should pause here because there isn't really much below on the monthly time frame. Now if we go to the 3-month, let's go see if there's more. Strong support at 26.990 on the day, boss. Yo, what's up? Thank you for that. You said 26990. So let's take a look at that. 26990. Oh, you're talking about just with like support and resistance lines? Yeah. So it would 26990 would put you through this entire range. So yeah, if you were to gap beneath these 28K regions and go all the way down. So if we do go up to the 29.5, take out this 50x pool of 500 million characters, kind of come up and fatigue off that point and continue lower, that's entirely possible too. The recovery of at least some idea of the vector would be something to look at this time personally. But yeah, if you come down to this region, because there's a stalling, there's no immediate rush of like 100 million or billion here or anything. So yeah, coming down into this region. I've been wrong before, so we'll see. Let's see what the 6 month has in store. 6 month is basically your idea of this support at, yeah, beneath the 27K. There's not much until you get to the sub 25K region. So if we come down into that, that's the entire candle recovery of that impulse out of here. Generally, if we Bart Simpson, we would come all the way down to the very low of the range though. And it would be really fast, most likely. If we go to the 2-year once again, 28.866 billion remaining down to 28.8. You got a little bit of a gap until 27.6 and 81 and 72 billion. So there's this little bit of a gap of $1,000 to contend with, where there's not really much liquidity down there. So they would likely have to stall out and induce more. And that's what they do when they have these gaps in liquidity, is they like consolidate and create a range like they did here, and it creates the liquidity here for them to gap down to. So they have to create the liquidity to justify the repricing algorithm to take them down into that region. And so they consolidate until it gets thick enough to warrant the move down. And then they get thick enough to justify the move up, then to immediately bring it back down, because they just needed the money to exit their position and switch sides. And so yeah, there's no real rush to come down to the 28.5 in my humble opinion, because there's just really nothing there. They got what they came for, basically. So let's see what is going on. Let's go back into the 15-minute time frame. 15-minute now, seeing this ambiguousness of another candle here. Are they trying to ping in some more? We do have the thick cloud, so I do expect a rejection off of this cloud. So if we do come up here, I expect a rejection, and then what do we do from there is the question. So if we do come up to this region, it's just a recovery of that 50x pool. Let me be clear about that. This thick cloud is not something you can easily negate, generally speaking. Now, there are times in the history where we do that and come back out of this easily. But generally speaking, you hit the cloud, you reject off it, and then you create a double bottom, and then it takes time to thin out. And so this type of idea is more what you ideally want to see. You see this thick cloud, you get rejected off of it. It's a recovery of the vector. They come back, they create a double bottom, solid double bottom. It starts to thin. They come back, they kiss the cloud, and then there, that's your ideal like swing entry idea. And this was also kind of like a rising sun event on that time frame. If we go back to this too, and we look at the higher time frame, we're going to see that the same thing was occurring. We got the cross up event, and we had the double bottom with the rising sun, and it's just all fractal in nature. Like I see this like Cinderella shoe looking fertile crescent, whatever you want to call it, tidal basin of between the mountains with the rising sun, and then you get the cross up event and boom, you're gone. And that's the most like, you know, boom, like for bang for your buck play, if you will. So until you get that, that's really what you want to see on that hourly time frame with the conjunction of the cloud and all that stuff in your favor. So until you have that cloud on your side with the, so ideally what you would want to see is if we do come up to this region and the cloud starts to thin in a manner here, and then you start to get that thinning at a certain level, then you could be slated to come into some idea here. But as it stands right now, this is basically like just a surge up, and you're going to expect a rejection off of it. So people are likely drawing these and saying you got these bear pennants that are forming and you're going to go lower. It's possible we do. Let's go see what is coming into the charts. As we approach the 29K region, are they going to sweep all of these 100xers completely? Got 41 million shorts pinged in there. Booyah. Alright, so we reclaimed the wick almost in its entirety. If we come back down to 29K even, then that wick will have been reclaimed. We just currently closed out the hourly. The hourly volume on that last candle was pink, which is a stop hunt idea vector in nature, which expresses a potential fatigue. So if you're ever going to think about scalping an upside play, that's where you would do it, right then and there. So we're gonna just put that out there as a thought into the thought bubble into the universe. And that puts you for third Tuesday. Getting a cross down on the MACD here. Broke 29K here. Let's see what it pinged in, because there's a lot of traders that ladder in their trades as well, so they're trying to see where these people laddered. There we go. There's some shorts that they pinged in, some extra shorts. Another 40 million pinged in there. And that could have been where they fatigue out all those 100xers, and that's as much as they push it before they start to come back into this guy here. And that's what we're looking for. That is where you find it. And so right there, boom, that could have been your absolute 𝗥𝗲𝗶𝗶 idea. The cloud on the 5 minute suggests that you could get a surge up. So that's my story, and I'm sticking to it, folks. Hope you trade safe out there. FOMC is on Wednesday. This is false move Monday. So is this the false move for the upside and everything's already caked in and they're gonna go make that stab up to 32K? I'm here for it either way. And yeah, that's about it. Once again, thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same, bringing the fire, the accuracy, the precision, and all that fun stuff. And we'll catch you on the flip side. Peace.